Are mortgage interest rates going up? It's a great question, and it's a question I often get, and it really just depends on the market. What we're going to look at is two major things that you can follow to see what mortgage interest rates are doing. The first one is going to be what we call mortgage-backed securities. Now, with mortgage-backed securities, this is an indicator and a tracker of what's happened with mortgage rates as well as what is currently happening with mortgage interest rates that you can follow. Now, what you want to look at here is going to be a chart of mortgage-backed securities. Now, when we're at the top or the top part of this chart, that means that we're at lower interest rates for you, the consumer. When we're at the bottom of the chart, that means it's going to be higher interest rates. You're looking to the left of the chart, that's back from September where rates were all the way till today. So you can see there's been a lot of volatility. You can see that rates got a lot worse than we are today. They've gotten better, they've gotten worse. So we're kind of in this roller coaster of rates. But the good news is we're kind of falling within a range of, lower mid 5% to upper, lower 6% range that we've been going up and down in. So you really want to follow this to see what rates are doing. But an indicator of what is happening with rates and what to expect is going to be inflation. So really what you want to follow is called the CPI number, which measures and tracks inflation. And so as the inflation number increases, then that means it's going to be higher mortgage interest rates. When we see the inflation number come down, that means that we're going to see lower mortgage interest rates. Inflation CPI number is a 12-month reading, and so it's always going to average the last 12 months. So as one month falls off, the new month comes on. It takes a little bit of time for that inflation number to really have a big move. But we've been seeing the inflation numbers come down. The last report, they did some corrections, so it wasn't quite right. But we should start seeing the inflation numbers continue to come down as we progress and move forward. Come March and then again in May, we should see lower ratings, which means that we should see mortgage interest rates come down. The other thing that you want to look at is going to be the impact in relationship to rates and housing prices. Because when you're making a decision to buy, those are the things that affect your affordability. So when mortgage interest rates are high, you're going to see that there's more room for negotiations because there's less buyers that can qualify. That's kind of the state that we've been in for the last several months, is that there was more room for negotiations. You saw housing prices soften. A lot of people were concerned that they're going to continue to go down and crash, which is not the case. Definitely not that type of market. There's way too low inventory in order for that to happen. But what you're going to see is that as the inflation number comes down, mortgage interest rates come down, more buyers are back in the market, which we're already starting to see. And as there's more buyers in the market, that means it's going to cause the prices to go up because we still have such low inventory. There's more buyers per house, which means the sellers have more options to choose from with the buyers, which means they have to offer more. So you always want to look at the correlation of rates as well as home prices to see when is the right time for you to buy. I'd love to have a free consultation with you to see what you can qualify for, as well as create a home buying plan for you. Even if you're not ready today, today is a good day to get the information so that you're prepared in the future.